Tesla stock closes today at a 13-month high. Post-earnings rally continues on. Public count, new all-time highs here today. Congratulations. Congratulations to everybody hitting all-time highs in your portfolios out there, okay? I want to talk about Tesla at the beginning of this video. This video came out 6 hours ago. Dan Ives talking about the $1 trillion opportunity for Tesla. I thought this would be an important one to react to here, share my opinions and perspectives there. Then I want to go ahead and get into this one. Markets at a crossroads while jobs data and elections loom. Looking forward to getting into JP Morgan's opinion there. Bryn Talkington bought more Nvidia. Oh, that's interesting. Meta shows durability despite potential near-term volatility. Want to react to that one, give my opinions and perspectives there. And then last one up here, Google, another company, report next week, plus Meta's reporting as well, and Amazon next week, and Apple, by the way. Next week's going to be insane. Busy week ahead. Google has nice growth this year and expect the same next year, so looking forward to reacting to that one. I'm going to have two pinned comments down there today. One is free workshop I made last month for you guys, stocks to buy now for 2025, and the second pinned comment down there is going to be this video I created over 5 months ago. This is back when Palantir was $20 a share. Buy Palantir stock and don't stop. If you care about Palantir and you never got to see that video, I think it's an important video. It's a 34-minute video just talking in depth about Palantir back when it was 20 bucks and kind of, just very in-depth thoughts there. So yeah, I'll put that as second pinned comment down there and let's get reacting. Oh, and by the way, new all-time high subscribers in the history of the channel. I appreciate each and every one of you here subscribe to the channel. Thank you for all you guys and also all of you that smash the thumbs up. Appreciate y'all.
Wedbush Securities. Good to see you, Dan Ives. Some of your thoughts on the stock moves, which have been monstrous this week, can it continue to move higher?
It's just starting because what I view is they needed to ultimately show that margin story that it was going to rebound, and we saw just massive margin rebound in terms of for Tesla, and it's all about deliveries into next year. 20 to 30% growth, much higher than anyone expected, even the bulls like us. I think it's get the popcorn out. This is just the stage to this company being over $1 trillion market cap.
I mean, someone when I was asking about the competitive landscape said there is a monstrous difference between Tesla and Lucid and Rivian. Would you say that's right? I mean, not even in the same sentence?
We're talking Mahomes compared to other quarterbacks, right? I mean, this is just a separation from a scale and scope. They're going to have 2 million deliveries next year. I mean, a lot of these you're talking about 100, 200K. What Tesla's able to do right now it's expanding that product line. You'll see Semi, you'll see Roadster, of course, Cybertruck's out there. Sub $30,000 vehicle, we think, going into next year. That's ultimately going to be the key as this all ultimately plays out. And look, you go into this, me and you have talked about this the last few weeks. New York City cab drivers barraging Tesla into this quarter. They showed the margins, they showed the delivery, and I do believe the robo-taxi takeaways was the wrong one that the bears came away with. This will be an autonomous and AI story over the coming years.
All right, first off, as a football fan, Andy Reid can make any quarterback look great. I watched him make Coy Detmer look like an all-star quarterback back in the day, okay? Just need to say that first and foremost, okay? It's not Mahomes that great. It's Andy Reid's that damn great, okay? But listen, in regards to Tesla here, okay, we have a company where everything is now trending back up. Deliveries, production, revenue, gross margins, net margins, everything. The future, the hype is back. The excitement about what products and services are coming out over this next 12 to 24 months, it's all going back in Tesla's direction, right? And so I think that's just a massive catalyst for this stock. And so, and I'll speak in just a moment about kind of where I'm expecting the stock to go from here. But he's 100% right in regards to Tesla has the momentum again.
Kathy Wood over at ARK Invest sold 77,000 shares. The closing price was $260.48, valued at over $20 million. Mistake taking some profits now? I mean, how quickly does this stock grow? Was that not a good move on her part?
Look, Kathy and ARK, one of the biggest supporters of Tesla, right? So, they'll, for the long term, if you look at their model on robo-taxis and where this is all heading, it just speaks to our broader point. This is the most undervalued AI play in the market. And I think what we saw with this quarter was a huge step.
Listen, I'll show you everything you need to know about ARK, okay? And caring about what their opinion is and all those sorts of things, okay? Let's go ahead. Let's pull it up. This is all you need to know right there. 5-year return, ARK ETF, the big dog fund, 9.5% on a 5-year versus the Qs versus the S&P 500 is at 86% and 145%. And that's on, once again, that's on a 5-year basis. You know, there's nothing else that needs to be said there. So if you care about what ARK's doing, I think you're just, honestly, you're playing the game wrong.
Direction because of margins. Because we can talk about AI, autonomous all day long. Comes down to margins. You couldn't see those team margins. So the 200 pip improvement now going to 20% next year. But look, 20 or 30% delivery growth. If they even hit the bottom end of that range, then this is a stock with a 3 in front of it.
Yeah, I started to hear some good things about the batteries growth, the Cybertruck margins. Those seem to be good news. There was some impatience pertaining to full self-driving at the end of 2026 because is that hogwash? Does that get pushed back to 2027? Is that okay for you?
To me, trying to look at 6 months, if it's first half 26, second half 26, I think it's splitting hairs in terms of where this is all going. Because the autonomous and AI story, I believe the AI story is worth $1 trillion alone to Tesla. So if it moves out 6 months, it doesn't necessarily move the needle for us. In the near term, it's really about coming out with a sub 30K vehicle. I think that's first half of next year. Margins rebounding, delivery growth rebounding, especially in China. And then you start to look at all the growth levers that could happen here. That's why if you look at the last 24 hours, the bears, they're going back into those hibernation mood.
Elon Musk has shown his political cards. And what do you tell the Democrats? Should they sort of put their political views aside and still believe in Tesla?
Look, it's a tightrope. I mean, clearly, it's been a controversial issue, but I think in terms of U.S., despite all the noise, it's been limited from a demand perspective in terms of the impact. Now, I'm not saying going forward there can be some, a little nervousness on that, but the reality is if you produce the best vehicles in the world for EVs, consumers will buy them. And I think we saw that with Cybertruck, right?
Yeah. What is your price target on Tesla, Dan?
300, and then bull case 350.
300, 350. In the cyber cab, I think, the timeline was a little vague. There's no cheaper model. People were a little disappointed with that. But there's definitely this feeling that there was some good news. We saw the stock surge. And as I said, there were times where this stock, once it surged, continued to do so the next month and then the following 3 months. Can I turn your attention quickly to Apple, because we have you here and we're going to have more Apple later in the show, but I did want to as Apple Intelligence is out now.
Oh my gosh, Apple Intelligence, oh please. Now, when it comes to Tesla, I do think it's important I say this in regards to Tesla. Oh boy, my baby. So first off, where do I expect Tesla stock price to go now? My opinion is it runs to 300 short term. Then what happens is we flounder for a while. And so when I say flounder, I'm talking about then the stock just kind of is in chill range, 285 to maybe 315, and we're there for a while. And then we're going to see the next generation vehicle, and then we're going to see what demand is looking like for that vehicle. If demand seems like it's going to be epic for that vehicle, then we run to 400. If demand is kind of like, if it's even a question about like, well, how much demand is there really going to be? Then we probably continue to flounder around, 275 to 315, 330, something like that, up and down, not really doing much. But yeah, if they come out with a new vehicle in 2025 and it's a banger and it's like everybody's going to get that dang thing, right? And I don't mean literally everybody, but it's like huge demand where people are like, oh my gosh, like they're going to start flying in terms of production, deliveries, all those sorts of things. I think we're going to be looking at a stock that then is 400 and then starts to approach maybe even new all-time highs. But it really comes down to that new vehicle there, right? Oh my goodness. All right, next video up here. Markets at a crossroads while jobs data and election looms.
Head of Global Market Strategy joins us once again. It's good to see you, man. Welcome back. It's been a minute.
Thank you. Good to see you as well. And it's exciting to be back on air.
It's great to have you at Post 9. So as we head out of 2024 and into a new year, I mean, how do you feel like the market's sitting right now?
I think big picture, we're sort of sitting at a bit of a crossroad. I think the market had a lot to digest this year. We had the summer patch, the summer period that was sort of weak. And then ever since the end of the summer, the resiliency story came back in. I think we sort of need to see what the next 2-3 job prints give us. I think obviously we need to see what the election outcome looks like, what kind of policies we'll be basically dealing with in 2025 and beyond. So I think we're at a bit of a crossroad, but considering everything, the economy is holding up much better than what we expected.
Yeah, I'm kind of surprised, I guess, to hear you say crossroads. It feels like we're on a pretty smooth road, right? Mm-hmm. Of economy good, earnings good, and Fed beginning this cutting cycle. What I hear, people throw out terms like animal spirits and M&A projections for next year. That seems like a pretty good road, not necessarily crossroads.
So something that I'll just throw out there is, first of all, I think the backdrop, you have to think about the backdrop in terms of a K-shaped backdrop, right? Like the recovery that we've seen over the course of the last few years has not been an even recovery. It's been an uneven across countries, across companies, across consumers. Rates coming down, obviously, is much wanted. A lot of expectations for Fed to ease. However, if you look at how the rate market has been behaving the last several weeks, there's been a bit of a reversal. And so a lot of expectation around soft landing. I think soft landing still remains largely a consensus view. And I would sort of say the pain trade here may be that we go back into no landing or some form of higher for longer. And in that case, I think you have to think about things in a more nuanced fashion.
Even if higher for longer is a reflection of economic strength, not necessarily a rekindling of inflation, albeit you do have political policies that, obviously are hot in the in the deficit debate about longer term interest rates. So how do you factor that in?
So I think that just because if we go into a higher for longer, that doesn't have to be bad, to your point, especially if the growth side of the equation remains okay. But I do think it has pretty big implications for how you think about portfolio positioning.
I do think he brings up an important point there, and I don't think that gets discussed enough, right? Is extremely important. Listen, interest rates are actually still relatively low. And I know that seems insane because of the last 15 years and what we got used to since the great financial crisis, those sorts of things. But if you look at a longer term horizon of let's say the last 50 years, what you're going to find is actually interest rates are in a lower place. And the economy's been great before with Fed funds rate way above 5%, like way above 5%. So to assume the economy has to be a complete disaster, with a Fed funds rate of, let's say 4% or even 5%, that's just probably not enough belief in the U.S. economy in general.
How you think about sectors and so forth. So again, since April of this year, the big trade has been defensives, bond proxies. A lot of the folks on the flip side have also been on the cyclical side, pricing a sort of soft landing. And to me, I'm not sure I would want to be in defensives in a higher for longer. I'm not even sure I would want to be in some of the higher beta, smaller cap, cyclical stocks. I would sort of be revisiting sort of the quality growth trade that has been, I don't want to say entirely dormant, but sort of dormant for much of the last 4, 5, 6, 7 months.
Oh, so you think with mega cap earnings looming next week, you think that could be a pivotal event then if you're suggesting you may want to lean into that area of the market yet again, so their earnings better justify the reasoning behind that?
Look, I think there's still a lot of pricing power in that segment. I think one needs to keep an open mind. We still need to get through the election, which is, again, around the corner. And depending on the outcome, is it a gridlock? Is it not a gridlock? What's the chance of a red wave? You could see some rotation in the market. For instance, red wave, many associated with more domestic trade, more small cap trade. So, yeah, you have to be careful there that there could be these tactical moves that happen for a month or two. But I think bigger picture, as you think about the next 6 or 12 months, 2025, I think quality growth, to me, is something that I would sort of keep an open mind towards.
I agree with you, by the way, on that, and that's how I'm positioned. But where's the consumer play in? You mentioned it. We hear from some companies, consumers strong, right? Like Deckers and others. We hear from banks, that their balance sheets are extended like they've never been, seeing delinquencies creep up a little bit, but not anything remarkable.
Retail sales good, consumer sentiment beat.
Yeah. So,
right to your point.
So where does the consumer stand, or is it so bifurcated at this point it's difficult to figure out?
I think it goes back to this, what I mentioned, just K-shape or bifurcated that you mentioned, the word bifurcated. I think you look at the bottom 1/3 of the consumer versus the upper 2/3. I think you see a pretty different picture. And where I'm sort of surprised is that bottom 1/3 has generally held up much better. Right. And I think they're having inflation come down, having rate environment ease a bit, even though it's not really easing that much. I think it's helping on a margin. But it's really the upper 2/3 that I think continues to carry the weight of the broader economy.
So just to put a point in that, do you believe that, not that it's ever been terrible with the consumer, even the low end, do you think we've bottomed out on the consumer's downside?
I think we've bottomed out probably in the next, I would say, 6 months. But I think the jury is still out a bit on that front. But again, if we go back into a higher interest rate environment, a few weeks ago, people were talking about 3.25 in the 10-year. Now we're basically back at 4.25. If that becomes 5.25, I think the equation starts to change.
Sure, but what are the chances of that actually happening, right? I mean, the probabilities of, we're talking rates backing up to 5.25. If rates were to stay here or in this general vicinity, would that make you more incrementally more bullish on the market?
I think if rates sort of stay in this vicinity, I think you have a slightly more even, if you will, business cycle continuation.
Interesting.
But I don't know. You tell me what's going to be the election outcome. What's the chance of a red wave?
Well, that's why it's
how does the rate market behave?
It's impossible to predict the next 10 days to 2 weeks. Who knows what the immediate aftermath of the election is going to be, either in terms of when it's actually decided, if we're thinking about cycles past in at least our most recent history. Who knows if it's going to be that night or not. But once you get past that, that's why I say you clear all that out and you still have the facts of a good economy, a hanging in consumer, and the Fed cutting interest rates, and companies dying to do stuff. Private equity sitting on dry powder, private equity trying to have realizations for the first time in what's been a really slow market. All of those things are stimulative to a marketplace that's good, moving higher.
No, I agree there. And it's not just investors, but it's corporates that have been sitting on the sideline. Yeah. Many are basically waiting to sort of get through this patch of upcoming uncertainty around the election. And
in terms of election, I was just talking with some private group members in our presidential election 2024 chat, which is always very entertaining. But I was just kind of sharing some of my opinions and thoughts on how the election is going to go. My opinion is Trump's going to win, certainly, electoral. I think he also might win the popular vote, which is shocking because that never happens, right? Dems have won popular vote for a long time now in terms of the elections. So I do believe he wins popular vote. I do believe he wins electoral. In terms of red wave, I think that's potential. I wouldn't bank on that, though. It is a potential. I think if I had to say maybe 55% of a red wave, I think there's a much higher probability of a red wave than a blue wave, in my personal opinion, in terms of this election cycle, right? But yeah, that's kind of my 2 cents on that. Would I bet on it? Oh, heck no. Next one up here, buying more Nvidia?
Which I thought was pretty interesting, considering the stock has been up a lot. It's right on the heels here of Apple with market cap. Why'd you buy more here?
Yeah, so next week, we know, which we're going to get into, we have the Oscars of earnings with all of the big names that we talk about. And I think that, how do you play that trade? I own Nvidia, I've owned it for a long time, and I think the stock technically looks like it's breaking out. It had been consolidating for the past couple months, but I feel really confident Microsoft, Apple, via OpenAI, Meta, Google, Amazon are all going to be talking about what? Their AI initiatives. And so I think next week, we'll have some winners and losers, some disappointments, but I think all roads once again lead to Nvidia, and you're going to continue to see huge CapEx spends from these companies as they're all individually looking to monetize their own endeavors into AI. And I still think Nvidia is in pole position to benefit from all of that CapEx spend. So I took the opportunity to add to it yesterday.
Yeah, it's in the midst of pretty good momentum. It's up 18%. month to date. It's been up 28% in some 3 months. As I said, it's barely off of its record high. The others have a little bit more to go. So unafraid, I find, Bryn, to even after that kind of momentum to buy it here rather than wait for a pullback, which hasn't been out of the question for this stock over a period of time.
Yeah, well, I mean, the way I've been playing the stock is, I have sold calls against it. So when the stock sold down, I closed those call positions. So just owning the stock. And so I'm like taking advantage of the volatility. And I think that's a good thing to do with a lot of these names like an Nvidia or a Tesla. But I just still see when I'm looking at Apple or Microsoft's, earnings and revenue growth really aren't that strong. Is part of that because of all of the CapEx, especially Microsoft is going to be doing. And I just think Nvidia is going to be the recipient. We won't get their numbers till the end of the month. And so I just think it's a good opportunity where next week is going to be a buy Nvidia. And I think that's going to be a consistent story from all of these companies who are spending billions of dollars on Blackwell, on H100s, H200s.
Yeah, when she says the end of the month, it's next month. So keep that in mind. NVIDIA's always reports like a month, if not a month plus after a big tech report. So what's my opinion on NVIDIA? The same as my opinion's been for the last 12 months now at this point in time. Stock goes 150, 200 into year end. And then I think it flounders for quite some time after that. And I think it'll just be in that 150 to 200 range for potentially a year or several years after that, right? I wouldn't bank on that stock crashing anytime soon. If you think like NVIDIA is going to just go to 200 and then crash, I think you're misguided. 2025 numbers are going to be great for NVIDIA, right? A lot of that's going to already be priced in, which is this last kind of move to 150, 200. And then what's going to happen is, essentially there'll be some worries about 2026 back half numbers, but that won't come anytime soon. That's still a year plus away. So the moral of the story is NVIDIA runs 150, 200, then it flounders for quite some time, right? And then it starts to look really attractively priced. And then after that, they'll probably have a downward cycle for a while there, which will be not fun to go through in regards to that. But for the short term, NVIDIA looks great. Just bottom line in regards to that. But, so anyways, that's my same opinion I've had for at least 6 or 12 months now at this point in time. And honestly, it looks like it's going to be right on. Look at the stock today, 143. Big tech earnings are going to come out. They're probably going to be great. That's going to give a lot of people confidence in regards to CapEx spend in 25. NVIDIA is going to probably come out, blow out their quarter. Boom. And the stock's 150, 200 in that range, right?
Josh, it's a top 2 position, I think, for you. We're going to have to wait until November 20th for earnings, so we got a minute to wait there. What's your read here? What's your take on Bryn buying more up here?
Well, I always root for Bryn, but I would just say we know AI spending has been and should continue to be explosive. The question is, how much is already baked into the expectations for the stock? You're talking about a company that out of the last 5 years has had a triple-digit return, stock return, in 4 of those 5 years. You're basically talking about a company that over the last year has grown its earnings per share by 415%. It's grown its sales by 195%. And investors have gotten accustomed to that kind of eye-bulging, eye-popping growth. And it's just hard for me to understand where that's going to come from. We already have the expectations based on all of the other Mag 7 names and the hyperscalers that are going to be doing this sort of investing. We know that. We also know that there's been a global push for companies to experiment with AI, incorporate AI, et cetera. So who's left? Is Jupiter and Mars going to start contributing here to the forward guidance? So that's the risk. I don't necessarily think that it has to be feast or famine. There's a universe in which NVIDIA reports great numbers. The stock doesn't rally, but doesn't get killed either. It's just a massive company with already embedded huge expectations, and the gains of the past are unlikely to be repeated from here. Doesn't mean there's not another 10% or another 15%. I just think it gets harder from these levels. And I'm saying this as a long. So I'm in the name.
I mean, JB and myself, we basically see eye to eye in regards to this. what you're going to see play out here is, a very nice increase in CapEx spend from the Metas and Microsofts, all those companies in 2025, which is going to help Nvidia put up another, 25 to 35% revenue growth year, right? But 26 is that year where I think we start to see a lot of moderation in terms of the AI chip spend, where these companies might up budgets 5, 10%. And then at that point in time, and I think there's a high probability of that. And that's going to be the moment everybody says, oh boy, that big upping in CapEx spend is not coming anymore. And there's no other big, massive companies to really count on the new guy, buying NVIDIA's chips. All the companies you want to be buying NVIDIA's chips are already buying them as fast as they can possibly get their hands on, and they're going to buy even more in 2025. But we're going to see a major slowdown in 2026. And so that's why NVIDIA, at the end of the day, I look at NVIDIA and I think it's going to be a stock that likely flounders 150, 200-ish range for years. And that's why I'm not interested in that. It's a great company. They're going to be putting up great numbers over the next few years, but I just don't want to be in a company where I feel like the stock price is going to flounder for years. It's going to be several years of floundering, in my personal opinion. So, that just is what it is. I don't know, what else to say about it. And so that's why I decided to take my huge profits and, move the money elsewhere. Is there another 10, 15, 20% you can make in the stock? Yeah. I think it's going 150, 200, as I said, for 12 months now, right? But after that, I think you're going to flounder for a long, long time. It's going to be kind of like a Tesla situation, but without maybe the crazy crash, because Tesla had that crazy crash, right, where the stock went from 400 to 100. I'm not convinced we're going to have that in regards to Nvidia. I think it's just more of a floundering situation.
In the name, that's why I went to you next. Weiss, you're in the name.
Yep.
Is there more near-term risk in this name now, given the run that it's had, as I said, the timing of Bryn buying it here? Just give me the way that you would observe, doing this now.
Well, just mathematically, when you're coming up to an event that's catalyst for the upside and the downside, given the performance you cited, there is more risk. But that's short-term risk. And Bryn buying it now, I'm sure that regardless of what happens this quarter, if you look out a few months, she's going to be happy she did. So it's always difficult to pick the timing on buying a name or adding to it, and she's adding to it. I've been there for a long time. So clearly right now they are in the sweet spot. And clearly they can't meet the demand that they're seeing from customers and want to be customers. So it's a great thing to do. And as I mentioned, I think a few weeks ago, the fact that Jensen Huang has been so visible and talking about demand, he's got to deliver. And him not be anything but a foolish person, I believe he knows it's going to be a great quarter. Now, what the whisper numbers get to be when numbers move like this, who knows, but who cares? That's a moment in time.
Makes the point, too, that, the factor of momentum is a very, very powerful, it's a very powerful thing.
But I'd also say that Taiwan Semi is the perhaps the most direct beneficiary of the strength in Nvidia. And they announced on their Phoenix fab, right, that yields are 4% better than their Taiwan fab. So that is powerful. That stock's had a good move, but I still think it's going to have a great move. Over the 4-year time period, if you look out for 23 to 26 forward earnings, they'll have doubled revenues, right? They'll have doubled earnings. That's tremendous performance. Not quite NVIDIA-like, but I also think it's much more sustainable.
Yeah, I don't like Taiwan Semi. It reminds me a lot of Micron stock, MU. Micron's a memory chip company. There's only a few real big memory chip players out there in the marketplace, right? And they're one of the giants. But I just don't like those companies that you're counting on the market to be great in order to really put up big numbers. I like companies that can really control their own fate a lot more. Nvidia can control their own fate. They can come out with new game-changing chips, as we've seen, right? They've completely changed the trajectory of that company by obviously what they did with the H100 and then kind of going on from there, right? And it's gotten them to many trillions of dollars of market cap, and it's probably going to, before it's all said and done, get it to, let's say $4.5, $5 trillion here in the short term, right? And Nvidia, by the way, long term could still be a $10 trillion company. Keep that in mind. But that's way out, okay? So Taiwan Semi, they're counting on, more semiconductors being made and those sorts of things, and they're going to do that. It's just I don't love to feel like I gotta bank on what the market's going to do. That's just never fun. Let's get into Meta stock now.
Nadeska Bernstein catching our attention today. The firm raising its price target on Meta to $675 ahead of earnings next week, calling the stock a set it and forget it blue chip holding, adding that the long-term story is as strong as ever. The analyst behind the call joins us now, Mark Shmulik of Bernstein, as we get ready for Mag 7 earnings to hit. So, Mark, is your point here that we've seen already?
My man's got the kayak back there. What in the world's going on? Where's Meta stock going, by the way? I've always felt like it goes 700 by the end of the year. We'll see. They got to come out with a banger earnings because the stock's quite a bit away from that. I mean, we're not even at 600 right now. So in order to get to my 700 call, they got to just smash it, man. And they got to have a great guide. And if they get asked any questions about 25, it's got to be very confident. If they can do that, I think we still get to my number, which I've always thought it could be 700 by the end of this year.
And I mean, what's the stock up? 63% year to date. You should just kind of hold it now and it's not going to do as much?
Yeah, exactly. You know, this has been a stock that's been a phenomenal run, really over the last few years. And, the questions we get going into earnings normally is, how do we think about the puts and takes around revenues, expenses? The questions we're getting from Meta investors is, when do we take profits? And so what we did is we looked beyond the quarter. We looked ahead to next year and beyond. And what we really see is a company that doesn't have those same terminal risk questions. It's trading at about a 5-turn premium to Google. This is kind of near record levels. And what that's telling us is this is a core business that's firing on all cylinders. And they're investing in the next big thing at the exact same time. So you've really got durability in a name and a management team that investors believe in, and we do as well.
So you don't see any volatility happening in, say, the ad market that would swing it one way or the other?
There's probably volatility. We've got an election cycle coming in, so a lot of incremental political ads. We've got a shorter holiday season ahead. A lot of kind of volatility out of some of the APAC e-commerce players on where and how they're advertising. So there's certainly going to be some of that near-term volatility. But what we're really exploring in this note is, not thinking about a quarter beat or miss, but really, is this a name you can own for years and not have to worry as much about kind of what the effects or what the impact of that near-term volatility means on whether you want to own the stock or not? And I think that's where we're at with Meta.
Yeah, the thing from Meta, it's the last company you have to worry about in regards to advertising. And the reason being is they own the best advertising assets in the world. They own Facebook and they own Instagram. And if you are somebody that runs a business, if you're going to advertise, you're going to spend on advertise, it starts with those two places. Those are the best bang for your buck. And then everything else comes after that. Everything else. But it always starts with Facebook and Instagram first. And so when you're in that strong a position of power, even if the ad market was to not be in a great place, like Meta's always the last to feel it of anybody. Like it would have to be so bad for them to feel it in any substantial way because of their position of power. But then you have WhatsApp, which monetization's there's just at the early innings of touching WhatsApp monetization opportunity, right? And if we think about the AI opportunity with this company, whoo, baby, it's just thing after thing after thing. And then they, Apple, I called it again, man. I told you guys when Apple came out with that VR product, I said that was going to flop, right? A lot of people were all hyped about it. It was getting so many views. People are like, oh, it's the next big thing. I'm like, dude, this is going to flop. They missed it by a mile. They way overpriced their product. They missed on the product. And sure enough, now we're hearing Apple might not even make that after this year, right? And so, they've won in that market as well. With their more affordable price points under $500, like that gives them that opportunity. And who's the threat there, right? And then you look at the partnership they have with Ray-Ban to make those Meta glasses. And I mean, just go through. I mean, it's just insane. They just have growth levers all over the company now. And, that's why you gotta still hold this stock. It's a must.
A lot of investors still remember the time, Mark, where the shares really traded around CapEx intensity and CapEx guidance. Where are we in that story, and does that number kind of move the market as much as it used to?
Yeah, that probably moves the number more. We're going on this massive investment cycle, and, the view we've got around AI and that thematic is you certainly have earned the right to go after this next big opportunity, but you have to do so long, as that core business is humming along. If there's any weaknesses revealed in that core business, you kind of lose that right. to go invest as aggressively. So how much are they going to go spend, on CapEx next year and beyond? And when are we going to start seeing some of those returns? Because so far, they've shown a great track record of putting that compute to work to make the platform more engaging and make advertising more effective. But as we get into that more opportunistic stuff, ROI is still very much an unknown.
So do you have more conviction on Meta as a long-term story than some of the other names you cover here, Amazon, Alpha?
By the way, I did a video very recently here on the main channel, and Meta was actually featured in it. So this video right here, I did it 3 days ago, top 7 dividend stocks to buy, right? Meta was one of the stocks I featured in that. And you don't think about Meta as a dividend stock because they just literally started paying a dividend a few quarters ago, right? But I was running through how much opportunity that company has to raise the dividend immensely over the coming years. And you got to understand, like, the amount Meta's going to raise that dividend over the next few years is ridiculous. Like, I wouldn't be surprised at all if we're 5-10 years in the future and Meta's paying out $10 per share to its shareholders in the form of dividends each year, right? And honestly, that could be in the next 5 to 10 years. And when you think about that for a moment, right? That's crazy because, like, for instance, somebody like myself, I have shares that I own. I mean, the cost basis on my shares in the public count is probably like $100-something. So when I start collecting $10 a year in dividends on a stock that I have my cost basis of $100-something, like, the dividend yield on that is ridiculous. But you can run the numbers and you start to understand, like, dang, this company could start actually paying out, down in the future, like $10 plus a year. It's they're going to get to crazy numbers. So Meta is actually a sneaky dividend stock, and it's honestly a value stock, and it's a growth stock because they got the big growth. They're also a dividend play, and they're a value play because you look at it and it's like at a forward P of 25-ish, somewhere around there roughly.
Snap, Pinterest, Reddit.
Yeah, absolutely. And I think this was always the position Google held, and kind of the genesis of the note was Google was that set it and forget it stock. You never get fired as a PM if you were overweight Google. That's never really been Meta's history, right? It did have that volatility and, questions around at some point, are they the next MySpace? I think those positions have reversed. I think the durability of, the Meta's core business plus their ability to potentially unlock things like business messaging, things like personal assistants and even wearables, I think that puts it up into a very different bracket as we just think about, real oversized positions of these blue chip stocks that you want to hold for years to come.
Hey, finally, Mark, just on content moderation and safety, we continue to see Instagram, for example, put in more controls, take a sharper focus on the younger user. Where are we in sort of, regulatory friction or scrutiny? Have they installed enough guardrails that the consumer now sees them as safe?
Good question. I think that one goes in waves as well. We're at a point right now where it certainly feels like that issue is something that is within Meta's control. But, you may be one negative news cycle away from that, rearing its head again, and we have then enter that debate. I remember the last time we went through an election cycle and coming out of it, what was Meta's role, in that process, and where are we on safety and, for kind of children using the app. So you're always like one news cycle away from maybe re-entering that discussion again. But I think the company's done a very reasonable job of keeping up, with kind of not just investor but consumer demands on making sure the platform is safe, because the safer it is, the more monetizable it is.
All right, Mark, thanks for joining us. Appreciate it as we get ready for those earnings. Nice surfboard.
Thanks for having me.
Mark Shmulik of Bernstein.
Yeah, I think 675 is a safe price target, but I do think he's going to have to up that probably over the next 6 months. I do believe he's going to have to up that. Next thing you know, it'll be 775. McDougal has nice growth this year and expect the same next year.
All-time high today with mega cap tech stocks leading the way. It is the first time the index has hit an intraday record since mid-July, and it comes ahead of next week's busy slate of tech earnings with 5 of the Magnificent 7 stocks expected to report quarterly results. Joining us now to discuss is Mike Bailey of FBB Capital Partners and Patrick Moorhead from More Insights and Strategy. And Patrick, you've been on the conference circuit here, overseas, and I know you've had a lot of insights on what's actually happening on the ground for a lot of these companies. What stands out to you as we get into earnings season?
Yeah, the biggest thing that stands out, and this shouldn't come as a surprise to anybody, is AI. And as I've been on CNBC multiple times saying, the gravy train of AI infrastructure continues. The Nvidias, the AMDs, the Broadcoms, it will continue. And then there's even some downstream benefits that we're starting to see, even with software companies like ServiceNow. So I think the big read going in is, what are these companies doing with AI? Are they incrementally taking advantage of these opportunities?
From the conversations that you've had, those concerns that hyperscalers are starting to cut back on spending because there's still some questions about the return on investment of artificial intelligence. Do you think those concerns have gone away?
So there was a lot of discussions, but you didn't have institutional investors pounding their fists on the table, and the Microsofts, the Metas, the Googles. They just kept investing. And I expect when we see next week with Google and Microsoft and Amazon and Meta, you're going to see pedal to the metal. You're not going to see CapEx reductions. I think each successive quarterly earnings that we get down the street, there will be a lot of questions, and there should be questions. And in 18 months, if we don't start seeing the downstream impacts, it could get ugly.
Mike, we look at valuations, and with many of these stocks now trading very close to their all-time highs, are you starting to get concerns about valuations?
So short answer is it depends. I know we've got, as you said, the 5 of the big Mag 7s are reporting next week. Some of them are starting to get a little bit expensive. I would flag a couple names. Apple starting to creep up there. Meta, again, expectations are starting to rise. We're having a higher and higher bar that these companies need to clear in terms of getting investors excited. There are a couple that are frankly looking relatively reasonable, if not inexpensive. Google or Alphabet is trading at a significant discount. Amazon, again, as that company just generates massive earnings growth, you're seeing that multiple, that valuation.
Yeah, if you want to know which big tech stock I'm the most bullish on for the next 12 months, it might come as a surprise. It's actually not Meta. The one I'm most bullish on for the next 12 months is Amazing's-on. That's the one I'm, like, if I had a bet on one stock for the next 12 months, which one goes up the most out of big tech, it would be Amazon. I actually believe they actually have the most upside. I think that's the most undervalued, underappreciated stock of the past 4 years, right? And I mean, you pull up a 4-year chart. Let's pull up a 4-year chart of Amazon. It's really going to show you how underappreciated this stock really is. Let's go ahead. Let's pull it up here. Let me get rid of the Qs. Let me get rid of the S&P 500. And let me go ahead and pull up Amazing's-on. So Amazon's going to look good on a 5-year, right? Here's a 5-year. So it looks good. Like, oh, wow, it's up 113% in the 5-year. But let's pull up a 4-year. So we were right around, here? Roughly 4 years ago or so. So let's go ahead, pull it up. Somewhere around here, roughly, right? Yeah, I mean, on a 4-year, the stock's up maybe 10, 20%, right? Somewhere around there, roughly. Yeah, for 4 years, for Amazon stock to only be up 10, 20%, it's getting smoked by the S&P 500, right? It's getting smoked by the Qs. Like, Amazon's not a stock that underperforms the indexes almost ever. But over the last 4 years, factually, it has. And I believe there's going to be a lot that's going to change in the next 12 months in regards to Amazon. And don't be surprised at all if when we go to look at a 5-year chart, so at this time next year, and we pull up a 5-year chart, so it's going to be the same place, don't be surprised at all if Amazon is then easily beating the S&P 500 and the Nasdaq. Don't be surprised at all. I would expect it. I would expect it, which means Amazon's got some pretty epic upside. Now, am I going to play short-term call options on Amazon? Oh, heck no. Oh, heck no. I'm not going to jinx it, okay? I'm not going to jinx it. But my opinion is Amazon's got a lot to run here.
Really continue to be well below average. So there's sort of a nice spectrum out there of names to invest in mega cap tech. Plenty of growth, but I think you can pick names that are trading a little bit below average, or you can go for some of the names where sentiment has really started to creep higher.
Mike, Google is one of your choices. Explain why you like it, as is United Health and one other, I can't remember. But go ahead, talk to me about Google.
Sure. So we do like Google. I think getting into this idea of markets hitting all-time highs. We see it again and again. I think it is important to make sure you've got some growth in your portfolio that's trading at a nice valuation. Basically, you want to give yourself some wiggle room. What if there's a problem? Do you own stocks that are already baking in maybe some negative sentiment? So Google, again, very nice growth this year, probably similar growth next year. In fact, in some ways, it's growing as fast as Meta, but trading at a 20% discount. So we like owning stocks like that. Some of the other ones that we're looking at.
Yeah, but the thing with Google is there's just a lot more questions around Google and if they're being disrupted over the coming years in regards to the ad market, in regards to obviously what OpenAI is doing. So that's a big question mark for Google. And that's why it's trading at, you look at Meta. Are they being disrupted by anybody? No one. And so you have disruption fear. When it comes to Google, you don't have that with Meta, right? So even if the companies were growing at the same, like Meta would naturally command a much higher valuation, right? It's important you understand that. So hope you guys enjoyed today's video. As always, first pinned comment down there today will be for this free workshop. I can email it over or text it over. Stocks to buy now for 2025. And the second pinned comment down there will be that video I did on Palantir from 5 months ago now when it was like a $20 stock. Buy Palantir stock and don't stop. If you never watched that and you care about Palantir, you may want to check that one out. Alrighty, much love and have a great day.